Okay, so we will start this chapter, and this chapter is a bit hard. Okay, so it is not as hard as depreciation and disposal, but it is hard. Okay, and it's long. Now, why is it hard? Because incomplete records means you have to find a missing information. And what kind of that missing informations? We never know. It can be anything. That is why I say it is hard. Okay? So, to be able to study this incomplete records, you have to understand well in terms of SOFP, yeah, statement of financial position, yeah. You must remember that. If you don't remember, recall again. Okay, please recall again. And then income statement or IS. We will deal with this a lot. Yeah. And then the other one will be cash book. And then other payables, and other receivables. They all connected. Yeah. So in this chapter, you will learn to find missing capital, opening or closing, missing profit or loss, missing sales, purchases, expenses, bank balance or drawings, margin and markup. Missing inventory can be by theft, flood or fire, or and damaged goods by using margin or markup, and rate of inventory turnover. Yeah, you will study a lot in this chapter. Okay, but it is not possible that you will be questioned all in one question. Yeah, it can be missing capital and profit, and then missing expenses or drawings, or can be a missing closing inventory, but you are required to do income statement. Yeah, or you can try to find a missing inventory because of natural damage, natural disaster. Yeah, can be like that. Okay, we never know. Yeah, but the point is you must be able to remember all of these. Yeah, SOFP, income statement, cash book, other payables, and other receivables, so that you know how it looks like first, and then you know what is missing, and then you can try to find from there. Okay, now let's start with missing capital. Yeah, how to find missing capital, both opening or closing. To find capital at the beginning or at the end of accounting period is to apply the accounting equation. Accounting equation is assets equals to liabilities plus capital. If we have a missing capital information, then you can find it by using this equation, assets minus liabilities. Okay, so how to find it? You can list all of the assets and all of the liabilities, and then you minus liabilities with the assets. Okay, please let me know if I'm too fast, yeah? Next, to find capital, students must prepare a statement that is called Statement of Affairs. Okay, this statement is to show how capital calculated by decreasing all assets minus with all liabilities. Yeah, when it comes to statement, it always been in the vertical format. Yeah, and this is the templates for Statement of Affairs. Let's see, XYZ business, Statement of Affairs as at blah, blah, blah. Yeah. To find capital, you must list all of the assets. And here, list all of the assets so that you have total assets in here. Yeah. After you have total assets, then you list all of the liabilities so that you have a total liabilities here. Yeah. And then asset minus liabilities, then you will have a capital here. Yeah. Now the capital can be at the beginning or at the end. How are you going to differentiate between them? You have to use the information given in the question. if the information given in the question stated at the date of 1 January 2019, like here, yeah, like over here, it means you are calculating the beginning. If you are calculating using informations from 31 December 2019, it means you are calculating capital at the end. Clear, yeah? Now, what if you are given with informations of two ending dates, which is 31 December 2018 as well as 2019. Which one is for the opening? The opening is the oldest one, yeah? So 2018, 31 December 2018 is equal to 1 January 2019. So if you use information in 31 December, change it into 1 January 2019. So then you will have an opening balance of capital. Yeah, don't be confused. Just look at the year. Yeah, the oldest one will be the opening. The youngest one will be the closing. Okay. So far, any question? Oh yeah. Next is how to find missing profit or loss. To find missing profit or loss, this is the continuation after you calculate capital for the beginning and for the end. Yeah. And then you must remember statement of financial position in this part. Because part of statement of financial position, there is a finance by part or capital part inside it. Yeah. And the capital part looks like this. This is part of SOFP. Yeah. The capital part or finance by part is looked like this. Capital at the beginning here, and then add with additional capital, and then plus if it is profit, minus if it is loss. Yeah, you put here, and then minus drawings there, and then you have capital at the end here. Yeah, I believe you remember a bit about statement of financial position on the capital part. Yeah, if you don't remember, please review again our chapter in secondary 3. Yeah. Okay, now the missing information is here. The net profit and net loss. Yeah, the one with the blue color. Yeah, this is the missing information that you need to find out. So you have an information of capital at the beginning. Yeah, given already. Sorry, not given. Is calculated before. Yeah, when you calculating capital at the beginning. And you also have information's capital at the end. Yeah, by making a statement of affairs. And then you will be given with informations of additional capital as well as drawings. So can you find net profit or loss? Yes, you can. Yeah, by reconstruct this capital. Yeah. So if I want to find net profit or loss, I'm going to move backwards from bottom to the top. Yeah. So I will start with capital at the end like this. I will start with capital at the end here. And then I will plus with drawings, and then I will minus with additional capital, and minus with capital at the beginning. Yeah, so it's going to be look like this. Yeah, plus drawings, minus additional capital, minus capital at the beginning. If the result is positive, then I have profit. If the result is negative, then I have loss. Yeah, so that's how to find capital at the beginning, capital at the end, as well as net profit or loss. Okay, so that's one problem solved. Okay, next, in relation to income statement, you might also have to find a missing sales. Sales is needed when you are preparing income statement. Okay, now total sales divided into two, because transactions divided into two, cash transactions and credit transactions. Sec 3 term 1. Yeah. So cash sales can be found in the cash book because cash sales only related a direct payment. Direct payment can only be done with cash or bank. Yeah. So you can find it in the cash book, or no, not or, and credit sales. Yeah, to find credit sales, you calculate the credit sales by preparing trade receivables account or SLCA. We have learned SLCA before, so I believe you know the format, yeah, or the template. So let's see, to find cash sales, you can find it in the cash book. In the cash book, look at here, in the cash book part, you will see sales in the debit side of the cash book, because sales will increasing the money. Yeah, can be cash, can be bank. So that is why it will shown in the debit side here. Yeah, so whatever you find in the cash book on the debit side and the details is sales, put that as your cash sales. Okay, next, credit sales. To find credit sales, this is the SLCA templates, yeah, or trade receivables templates. This is familiar with you, but for SLCA in incomplete records, it's not going to be as complete as control account. Yeah, you just have to remember the basic. The basic is balance BD is in the debit side. Yeah, there's no balance BD abnormal here. Yeah, I ignore it. And then receipts is the important one also. Sales return here, discount allowed here, bad debts here. Yeah, if there's any additional, maybe you can have interest charge over here. But the point is, you must remember SLCA. Otherwise, you cannot do, or you cannot find the credit sales. Okay, the credit sales in the SLCA is in the debit side. So to find credit sales, you must add everything, all informations from the credit side, yeah, from receipts from trade receivables until balance CD, and then minus with balance BD. As simple as that. You add everything and then you minus balance BD. Okay. Remember the business. If the business has just started, it's not going to have any balance BD. If the business have operated for some years, it will have a balance BD. Okay. So by calculation, it's going to look like this. Yeah, receipts from trade receivables plus sales return plus discount allowed plus bad debts plus balance CD and minus balance BD. Yeah, by calculation, it's going to be like this. Any question? Any question? No? Next. Example. James has not maintained a full accounting records. When you see this sentence in the question, yeah, you have to understand that you are in the incomplete records chapter. So you must, the clue is that, yeah, so when you see this sentence appear, not maintain full accounting records. So it is an incomplete records chapter. So you must remember everything that we have learned in this chapter, yeah? Because every formula will be used in this question. He has a list of only few accounts, trade receivables at 1 January and 31 December. We know that January represent BD and December represent CD, yeah? Okay. Next, we have sales return. We have check received from trade receivables. We have discount allowed, and also we have cash sales already been given to us. So we don't have to look on the cash book. Okay. On December 31, any one of the trade receivables declared that she is unable to pay her debts. So this is called bad debts, yeah? Can be bad debts, or the other name for bad debts is irrecoverable debts. Okay. So after you have bad debts here, 700, you are required to find amount of sales for the year 2015. Yeah. So the answer, total sales is from cash sales plus credit sales. We already given with cash sales over here. Yeah. So we need to find credit sales. To find credit sales, you add everything on the credit side. Okay, you must remember what are those in the credit side of SLCA. Yeah. You add everything on the credit side minus with balance BD. Then you have credit sales. After that, total sales is cash sales plus credit sales. So you have 55,700. One problem is done. You have the sales. So you can perform income statement. Yeah. So this is why I say this is quite difficult. Yeah. Because you're not given with information, you have to find it because it is missing. Yeah. Next, how to find missing purchases. This is the same like sales. If sales has cash purchases and credit, cash sales and credit sales, purchases also has the same. Yeah, cash purchases can be found in the cash book, and also credit purchases can be calculated by preparing TP account or PLCA. Okay, so we have learned this PLCA in chapter 16 before. Yeah, you have learned this, and I believe you must understand that. Yeah. So cash purchases will be in the cash book on the credit side because purchases will decreasing money. That is why it shows in the credit side of cash book. Okay. And for credit purchases, this is PLCA. Purchases will be on the credit side. So you will be given with informations all from balance BD until balance CD. Then to find purchases, you just have to add everything in the debit side and then minus with the one that is in credit side, except for purchases because we have to find purchases. Yeah. So by calculation, it becomes like this. Am I too fast? Okay, good.
No, miss.
Good, good. Okay, so credit purchases will be payment to trade payables. Yeah, from here. And then purchases plus purchases return here. Discount receive and balance CD minus with balance BD. Then you have credit purchases. Once you have it, then you can add both. Yeah. As example here, Mystique has not maintained a full accounting record. Has not maintained a full accounting record. We are in chapter incomplete. Yeah. The list of accounts is given here, 1 April 2010, 31 March 2011. Yeah. And then you have balance BD here, balance CD here. Jen, camera on, please. Price also. Purchases return, check paid to trade payables, discount receive, and then payment for goods for resale. Payment for goods for resale is also representing cash purchases. Yeah, so you have cash purchases already. Our job is to find credit purchases. Yeah, same like sales. So you have information here. I'm going to add everything from the debit side of PLCA here and minus with balance BD. Then I have credit purchases. Okay, so the total purchases will be 5,000 plus 15,000 equals to 20,000. Yeah, and then done. I have purchases, I have sales, so I can do income statement. Yeah. Now, next, how to find missing expenses. Okay, that is to be transferred to income statement. Now, this chapter is actually chapter other receivables and payables chapter. Yeah, it is exactly the same. Okay. Remember when you have to prepare expenses account and then you put balance BD as prepaid, balance BD as accrued, yeah, and then you find IS here, expenses to be transferred to income statement. Okay, we have studied this before. I'm just going to review a little bit. Yeah, For preparing expenses account, you need to find expenses to be transferred to IS so that you can put that in your IS. Because our goal here to do IS, you have find sales, you have find purchases. Yeah, now you have to find IS expenses to transfer to IS. Okay, so just a little bit recall. Prepaid at the beginning will be added to the amount paid during the year. Yeah, prepaid ending must be negative or deducted. Accrued beginning must be deducted, and accrued at the end must be added. Okay, so you can watch again my video on the other receivables and payables. Yeah, if you forgot, this is exactly the same. Yeah. Now, for example, here we have informations about expenses in Mystic's book. You have informations on April 2010 and 31 March 2011. So 2010 will be for balance BD, and 2011 will be for balance CD. You have prepaid rent, opening and closing. You have outstanding insurance, outstanding representing accrued. So you have accrued beginning and accrued at the end of insurance. You have informations from receipts and payments, indicates that this is a bank. Yeah. So rent paid during the year is 1,200 and insurance paid during the year is 2,000. Okay. And then we start from this amount. Yeah. To find rent expenses to be charged to income statement is that amount of paid during the month. And then using this, yeah, if it is prepaid, beginning will be added, ending will be deducted. So plus with 500 beginning and deducted with 800 as the closing. So you have rent expenses for the income statement. Okay, next. Next, insurance expense. Insurance paid during the year, we start from there, 2,000. And then since it is an accrued, so using this one, accrued beginning will be deducted, accrued at the end will be added. So deducted with beginning and plus with accrued at the end. So you have insurance expense for 1,900. So total expenses is that. Yeah. So far, any question? No, yeah? Okay, last one before I gave you exercise. Last one. How to find bank balance and missing drawings on cash. For this one, this part is not really clear which one that you will be questioned. Yeah, you just have to remember what items or transactions that can decreasing cash or bank or increasing cash or bank. Yeah, sometimes informations about closing bank, cash drawings, or any other items inside the cash book are missing. Yeah, to find their amounts, you must prepare a cash book or cash book account, yeah, so that you know what is missing. For example, I'm going to show you cash book to account. All of these are items that will increasing cash book, increasing your cash. You have a balance BD, you have cash sales or takings or turnovers. Turnovers are the same, yeah, with sales, just the name is different. Cash or bank received from trade receivables, also adding cash book, yeah, or any other transactions that increasing cash or bank. Yeah, I believe you know what kind of transactions that increasing cash and bank, yeah? And then on the credit side, you will see bank overdraft, BD, if it is an overdraft. Yeah, you see payment for goods for resale, payments to trade payables, payments for expense, purchase of non-current assets, drawings, or maybe any other transactions that decrease cash or bank. Okay, now informations that might missing from this cash book can be any of one of them. Yeah, but the most common that is missing is balance CD. Yeah, the most common, yeah, balance CD, this one, drawings on cash, or payments for expenses. We never know what will be questioned. We never know. It depends on the question. Now, what I want you to know is that what are transactions that will increase in cash and that will decrease in cash. Yeah. From there, you will know what kind of information that is missing. Yeah. If I ask you, prepare a cash book to find a missing expenses payment. So it means you have to make this. And then when you see a difference balance in the debit and credit, you will see that credit side is lesser than debit. Why? Because expenses is decreasing cash book, right? Agree with me, yeah? So that is why when you see a difference in the credit side, it's not for balance CD, but it is for expense because you already given with balance CD information. Okay? There will always be missing part here. I don't know if it is in the debit side or credit side. Or maybe you are given with all informations related to cash and bank, yeah? And then it said that you have a drawings, but you don't know how much is it. It's missing. So what should you do? You prepare this cash book and then you find the missing drawings here. Definitely debit and credit will be different. Now the difference amount will become that drawings. Yeah, or maybe closing balance. I ask you to find a closing balance. Or maybe I ask you to find how much payment for goods for resale. It's also possible. Or maybe I have other transactions that increasing my cash or bank. Maybe I have a sales from selling unused non-current assets, disposal. Yeah, it will adding my money, right? Now I want you to find it by preparing cash book. Can it is possible? Yes, it is. Again, the questions when you have to prepare a bank or cash book, yeah, can be anything. Yeah, that is why you have to understand the cash book and what kind of transactions that adding cash book and what kind of transactions that decreasing cash book. Okay, so I will continue on sub number 7, which is margin and markup. And margin and markup are usually are questioned in the MCQ or in the structured question, but in the form of income statement, yeah? So I want you now to remember about income statement, what we have learned in income statement, and how will it look like, yeah? Because you will deal with that. So in this incomplete records, you will deal either statement of financial position or income statement. And margin and markup are usually used in the income statement part, yeah? Trading part, okay? If you don't remember trading part is income statement part 1, where you find until gross profit, yeah? From gross profit until below, it called profit and loss. But from sales until gross profit, it called trading account. Okay. Now margin and markup deal in the trading part. Okay. Now let's study what is markup and margin. So margin, by definition, it is gross profit percentage to sales ratio. It is gross profit over sales. Yeah. gross profit over sales. So the formula is gross profit divided by sales times 100%. Okay, it is always be in a percent or in a ratio. So that is margin by definition. Meanwhile, markup is gross profit over cost of sales. Okay, so the formula is gross profit divided with cost of sales times 100%. So it can be in the form of percentage or you can change it into ratio. Yeah. Okay, so once you have margin and markup, actually margin and markup are connected. Okay, for example, in the relationship here, if I change the formula into a letters like A, B, C, or D, now if you see over here, relationship between markup and margin, if the markup is GP over cost of sales and I substitute GP with A and I substitute cost of sales with B, then if I want to find margin but I have markup, how? I'm just going to make another formula over here where A over B plus A. Okay, for example, again, yeah, I repeat, if markup is GP over cost of sales, or I change it into fraction A over B, okay, then if I want to find margin, so I'm going to add B with A as the denominator, yeah? So the A over B plus A. After that, it becomes GP over sales. Okay? Now, what if it is margin? If you are given with informations of margin, but then you need markup in the question, then you can convert it. Yeah? So if margin is GP over sales, and I'm going to change the letter with C and D, if I need markup, but I am given with margin, then to find markup is C over D minus C. So if you change markup to margin, A over B plus A. But if margin to markup, C over D minus C. Yeah, so that is the formula that you need to remember. Okay. Now, GP stands for gross profit and COS stands for cost of sales. Yeah. Now let's see for the example. Example, you have a margin of 20%. Yeah, 20% here, if I change into fraction, it becomes 20 over 100. Yeah, so 20 over 100, I simplify it into 1 over 5. Okay, if margin is C over D, then C is 1, D is 5. But I don't need margin, I need markup. Yeah, I need markup in the question. So if I have margin, I can change it into markup. Okay, margin to markup is C over D minus C. So the C is 1, the D is 5. So the markup is C over D minus C, 1 over 5 minus 1. Then it is 1 over 4. Okay, if I change it into percentage, it becomes 25%. 1 over 4 is equals to 25%. Yeah, simple math. Yeah. Now, if I want to change it into a simple equation, you can also use it. Okay. For example, if I have 1, 5, and 4, let's say, in the income statement, when you want to find gross profit, okay, when you want to find gross profit, how? You will minus sales with cost of sales. Remember income statement, yeah? You must remember income statement as of now, yeah? So sales minus cost of sales equals to gross profit. Now let's change this S, COS, and GP with all the numbers that we have here. Okay, all the numbers that we have here. Yeah, we know that margin is GP over sales. So 1 over 5 is equals to GP, and the 5 is sales. Okay, because margin is GP over sales. Yeah, over here. Okay, so GP is 1, 5 is S. And then after we convert it into markup, we have GP 1 and cost of sales 4. So if I substitute here, then you will see the connection. S is 5, cost of sales is 4, and gross profit is 1. Okay, you can use this simple equation. This is equation from income statement. Yeah, and then you can change into a margin or markup. Yeah, another example. Sales minus cost of sales equals to gross profit. Let's say I have sales as 7 and then cost of sales as 5. Yeah, it means 7 minus 5 equals to 2. Okay, if I ask you from here, what is the margin? The margin will be gross profit over sales. So it becomes 2 over 7. Yeah, if it is marked up, the markup will be 2 over 5 because markup is cost of sales. Yeah, so why do you need margin and markup? Because sometimes you will have to find a missing information. Now, what kind of missing information is related in the income statement? The missing information related in income statement that requires margin and markup is when you lost an inventory. Okay, when you lost an inventory like this, can be by caused by anything, yeah, can be fire, can be theft, can be flood, can be any disaster. Yeah, now if you have a missing inventory and you don't know how to find it, you are using margin and markup to find it. Okay, now let's see the information over here. James Co. has the information below. You have sales, inventory at the beginning, purchases, carriage inward, and inventory at the end. This is the information. From this information, you are able to prepare income statement. Yeah, until gross profit. Okay, so at the end of 31 December 2015, there is inventory that is missing. Okay, James suspects that one of the employees stole them. James applied 25% markup. So we are given with informations of markup, okay, of inventory to set selling price. How much inventory is missing? So when you try to find inventory that is missing, you have to prepare or perform income statement. Yeah, there's no other way. Okay, the only way is to find or to prepare income statement. How? Okay, so we know that from markup or margin, we can create S minus COS equals to GP. We can create this. Okay, so if you have a markup of 25%, now let's see the workings over here. If the markup is gross profit over cost of sales, and it is 25%, so I change it into fraction 1 over 4. Okay, I have gross profit. Yes, I have cost of sales. Okay, but in fraction. I cannot find gross profit in here, in this information, in the question. I also cannot find cost of sales. Why? Because the missing inventory is in cost of sales. Okay, because the missing inventory is taken from the inventory at the end over here. So this inventory at the end is not a correct numbers, yeah, or there's a missing informations in the cost of sales. So we cannot use cost of sales. Okay, so that is why we cannot do anything about markup. We cannot do much about it. But we do have informations on sales. We have sales. Okay, so if the sales is 200,000, by fraction, I can change markup into margin. So if I have margin gross profit over sales and the fraction from markup is 1 over 4, so gross profit over sales is 1 over 4 plus 1. It depends on whatever here on the top, yeah? If on the top is 2, then you must add 4 with 2. Yeah? So 1 plus 4 at 1 over 4 plus 1 equals to 1 over 5. Now we know that 1 and 5. We have the sales 5, we have the GP is 1. Let's convert it into the right amount. If gross profit over sales 1 over 5, then to find gross profit is sales times 1 over 5. Simple math. Yeah. So if gross profit is 1 and sales is 5, to find gross profit over here, sales must be times with that. Yeah. Sales move here. Okay, so it is now become times with sales. Okay, so that's how you find this gross profit equals to sales times 1 over 5. So you have sales, change the sales into 200,000, so you have gross profit now 40,000. Once you have 40,000 and you have gross profit of 200,000, you have sales of 200,000, then we can calculate cost of sales. Remember the S minus cost of sales equals to GP. Yeah, pay attention. Yeah, ini a little bit harder. So 200,000 minus, we don't know how much our COS. That's what we want to find. And the gross profit is 40,000. So cost of sales is now 200,000 minus with 40,000. So the cost of sales is 160. Yeah. Now you have the total of cost of sale, you have the total of sales and gross profit. Let's do the income statement. Now this is the income statement. Okay. The first thing that you need to put is this one. This is number 1. Okay. Step number 1, put the sales. After you put the sales, you put cost of sales. This is number 2. Yeah. And then opening inventory, purchases, carriage inwards, and closing inventory are everything in here. You just have to copy paste it, just like you do income statement. Okay. Now from here to there is step number 3. Here. Yeah. So step number 3 is all of these. But when you find this 165, yeah, do not put this 165 in the right side. Why? Because when you see here, the cost of sales, the actual cost of sales is 160. Okay, so the next step is over here. Step 4. So you put gross profit, yeah, so you leave about 2 rows, yeah, to put gross profit here. After that, move backwards. Step 5. If you have gross profit here 40,000, it means your cost of sales is 160. Okay, so if you have 160, then you can find this missing information. You know that the missing inventory that is taken, yeah, by the one of the employee is 5,000. Okay, because 165 minus 5 is equals to 160. So this is how you are going to use markup and margin. Yeah, so far any question? No? Is it clear enough? Okay, if it is clear, then I am continue to the last part. No question, yeah? You sure? Okay, next, yeah? Last one, rate of inventory turnover. Okay, sometimes you will need rate of inventory turnover if you don't have informations on cost of sales. Yeah, or maybe purchases information is gone. So you can use this formula to find cost of sales, and then you can find purchases, because cost of sales consists of opening inventory, yeah, plus purchases minus closing inventory. Yeah, so there's a possibility where you are given with the rate of inventory turnover, yeah, but you are required to find the missing purchases information. Okay, so let's see the formula. If it is rate of inventory turnover, the formula is cost of sales over average inventory, and the answer is given in times. Let's see, for example, 5 times, yeah, 6 times, something like that, yeah. Now, if it is inventory turnover only without rate of, yeah, if it is inventory turnover only, the formula is the opposite. Okay, average inventory over cost of sales. Yeah, and then times with 365 days, and the answer is given in days. Okay, now so you pay attention on the question, what it wants. Is it rate of, or it's just inventory turnover? Yeah, now what is this formula means? The result of inventory turnover must be shown in times, yes, yeah, if it is rate, okay, usually 2 decimal places. And in days, if it is in days, you must round it up into 1 day 4 decimal. For example, over here, your result is 23.56 days. How are you going to record that? You will record that with 25 days. Yeah, it's not because the decimal place is started with 5. No. Yeah, because every time in days, even though it is 0.000000001, it considered at 1 day. Yeah, imagine that you go to a mall and then you have to pay a park, yeah, for a parking fee, and then you are your time is 1 hour 1 minute. You still have to pay that 1 minute for 1 hour, right? So it's same what with days. Yeah, so if you have 23.004 or 04 days, how are you going to record this? Still 24 days. Yeah, do not round it down when it comes to days. Clear, yeah? Okay, so it must round it up. Now, next, for example, the result of inventory turnover in times is 9.35. Then student must present the answer as 9.35 times with the word of times. Do not just put 9.35, yeah? Or if the result of inventory turnover in days, 29.21. So you must present the answer with 30 days, round up. What is actually inventory turnover? It is basically how many times the business repurchased inventory in 1 year. Yeah, so basically it shows the sales activity of the business. Okay, so let's say that you have 5 times or 6 times inventory rate of inventory turnover. It means in 1 year you only repurchase or restock in 5 times or 6 times. It means your sales activity is not good. Yeah, it's not good, because if you are active, usually you will repurchase it 1 month, once in 1 month. Yeah, that's another example for that. If you have let's say here 24 days, 24 days means every 24 days you will repurchase your inventory. Okay, every 24 days the business will repurchase the inventory. Yeah, so basically it shows the sales activities of the business. Yeah, the bigger, if it is times, the bigger the better. Yeah, if it is in days, the lesser the better. Okay, so the bigger the better. Yeah, for this one, the lesser the better. Okay, so that's it. Do you have any question?